Rob Gintner. I'm here with my trusted lending partner, Lisa Walker of the Cross Country Mortgage Team. And I have a couple questions that I've come across with some buyers.
Okay.
So we were just wanting to find out what she has for an amazing answer to help you. Should we get started?
Absolutely.
Awesome, let's do it. So the first one, obviously retirees, right? Always considered, I can't get a mortgage, I don't have income. So when working with retired and downsizing buyers, what specific loan programs and underwriting guidelines do you use to qualify them?
Yeah, so that's an interesting question because a lot of people assume when they're retiring and they're downsizing, they're going to pay cash for their home. However, when you're also on a fixed income, cash flow is really important. So what we're finding is many of our septuagenarians, octogenarians are actually taking out small mortgages. In other words, not putting all their money into it, keeping some of their money into assets. So they have a relatively small mortgage, still a small payment that they can pay off at any time, but at least is providing them more cash in the bank, especially if they want to do something with the property. In terms of guidelines and how we actually approve these individuals, it's fairly simple because they're based on fixed income. Oftentimes they have Social Security, pension, they are they've taken the minimum required distributions. All those things we can go ahead and we can qualify them on. In addition, if they have a qualified retirement fund, as long as they have enough money in there, we can actually use that without even requiring a particular distribution. It just depends on the individual.
Okay, that's great. Bridge loan or temporary financing options do you offer for buyers who need to close on their new, smaller home before their current home sells?
So this is a tricky one because in reality, I specialize in long-term financing, not short-term financing. So bridge loans can be pretty expensive. So in a situation where the house is not on the market, we often suggest doing a home equity line of credit and just basically saying that they're going to fix up that home. If, however, they need to sell the home right away, the home is for sale, you cannot do a home equity line of credit on a home for sale. So then they do have to incur expenses on the bridge loan. Now, the other thing that I do tell my clients is if you have a financial advisor and you have a retirement account, sometimes you can take a loan against your retirement account short term, which actually can work as well. So bridge loans, because the nature of them, they are short term, banks are not going to make that much money off of them. So they really do put quite a few fees on top of it and origination points to make it worth their while because they could be just a month or two on their books.
Yeah. And I know that's one of the questions people always have, right? Because it's like, well, how do I get into that house? Like, I can afford it, once I sell my house. So it's like, how do we flip that and get into it without having to do a mortgage? There really isn't a way to get into it unless I already have like an equity line of credit is what I hear you saying. Is that right?
Correct. And a lot of financial advisors always suggest a home equity line of credit on every house anyway, just in case those emergencies happen where they can pay it up and then pay it back shortly.
Okay, that sounds good. So what is your team's experience with reverse mortgage for purchase transactions?
So we have actually a special department within Cross Country Mortgage that actually does handle all our reverse mortgages. And what I find with reverse mortgages is communication. If you thought there was communication required on any loan program, reverse mortgages are the absolute epitome of where communication is. And you need to involve the entire family because oftentimes there are people that are of a certain age, they have to be, and they need support. And there's also situations where, their beneficiaries may not be getting as much money as they want to. So it just depends. The other thing is you need to have enough equity and income in your home. And that's where some people fall short. They may not have sufficient income and therefore the home is not worth enough. So sometimes it's harder to actually qualify someone with a reverse mortgage. But under the right circumstances, like any loan, Rob, we have to figure out what's best for that particular client. So I've seen them work well and I've seen them not work well, in which case, we do something different.
And that's what I love about you. I always make sure that you're always asking each person exactly what their end goals are, not just this purchase, but actually for the future, which I think really sets you apart from so many other lenders. Like, here's a loan, yes, go buy your house, great, bye, see you never again.
Yeah, we want to provide our clients options because you can't make the best decision unless you've looked at all the different options you have there. And, there is no, you alluded to it earlier, there is no set program for everybody. As a matter of fact, each individual has unique needs and each program has unique offerings, right? So we want to do a really good match on both. And it comes down to the two payments they have to make on the home. Closing, down payment and closing costs, and then the monthly payment. Both of them have to be meeting both short and long-term needs. And especially if you've got someone who's retired.
Yeah, fixed income.
Exactly right.
Yeah,
exactly.
Perfect. But I know I have like a lot of other questions that we could ask, but we'll wrap this one up for this session.
Oh,
you ready to do it again another time?
Oh my gosh, anytime. I love this.
Love it. All right, that's it for now. Rob Gintner Home Team and Lisa Walker, the Cross Country Mortgage Team, signing out.
Bye-bye.